I just closed on probably the best deal I've ever negotiated. I was helping one of my clients buy his very first home here in Phoenix, Arizona. We found the perfect house and got the contract accepted at a full asking price of $326,000. My client went to his lender and got approved for a traditional mortgage and was going to receive an interest between 6 and 7%. As banks always do, they ordered an appraisal to ensure that the property value was worth the contract price. Why do banks do this? They do this because banks do not want to lend more money on a property than the home is actually worth. Due to the interest rates going up here in Phoenix, real estate prices have slowly been coming down. The appraiser looked at the neighborhood comparables and determined that our sales price of $326,000 was not justified and appraised the home at $305,000. That's a shortfall of $21,000. Let me recap this really quick. The seller was asking for $326,000, which my client offered. The appraiser came back and said that the home was only worth $305,000. That's a difference of $21,000. When this happens in traditional real estate, there's one of 4 outcomes that usually happens. 1. The seller reduces the purchase price by $21,000 to the appraised value. 2. The buyer loves the property so much that he's willing to come up to $21,000 out of pocket. 3. They meet somewhere in the middle. Maybe the buyer is willing to come up $10,000 out of pocket and the seller will lower the price for the difference. And the worst case, option number 4, where the buyer is forced to cancel the purchase contract because the bank will not lend him more money than the home is worth. In our specific situation, the buyer was unable and unwilling to offer anything above the appraised value, and the seller was unwilling to reduce the price. This is where the magic started. I asked the listing agent that represents the seller, "What is your client planning on doing with the proceeds of the home?" The agent responded, "They're just planning on saving the money and putting it in the bank." I then told the seller how much money could the bank possibly be paying them in interest. They will actually be losing money due to inflation with the money just sitting in their bank account. I told the realtor, let's get rid of the bank altogether and let's promote the seller to being the bank. By going this route, not only will the seller receive residual income, but they'll earn 30 times more than putting their money in the bank. Essentially, I was able to negotiate and convince the seller to finance the $326,000 to my buyer at 4.5% interest amortized over 30 years. Let me repeat that one more time. The seller financed my buyer $326,000 at 4.5% amortized over 30 years. That's absolutely crazy. The buyer went from having a 6 to 7% interest rate to only paying the seller 4.5%. My client's payment went from being $2,300 to $2,400 a month to just over $1,600. Not only did my client get a smoking deal, but he bought this property with no credit check, no income verification, and no banks. This was a win-win for absolutely everybody. The seller got the purchase price of $326,000 that they wanted, and not only that, but they're earning 4.5% interest on that money. And the buyer was able to buy this house without using his credit, without a bank, and getting an interest rate that absolutely no one else is getting today. And that is one of the best deals I've ever negotiated for one of my clients. If you have any questions in regards to this transaction, please leave it in the comments down below. I appreciate each and every one of you for taking the time to watch this video. Please like and subscribe, and I'll catch you next time.